Welcome to this training on getting started with Settle's QuickBooks Online sync features. In this video, we'll cover how bills, invoices, external payments, and deposits flow between Settle and QuickBooks. This matters because syncing correctly ensures your accounting stays accurate, saves time on reconciliations, and helps you avoid duplicate entries. Let's start by looking at how bills sync to QuickBooks Online. When we place a purchase order, we'll usually receive an invoice from our vendor. We'll enter that into the Bills section in Settle and link it to our purchase order. We'll be paying off the bill, so once we upload the bill into Settle, it can sync into QuickBooks Online. Let's walk through the first example. This first bill is not tied to a catalog item, it's just a general product. That means it will sync as an inventory asset. You can see here the description is just plain text, denoted by the text page icon. When we sync over to QuickBooks, the system treats this as inventory because it's tied to a purchase order and we're using landed cost accounting. In this example, we've got 500 items at $20 each, totaling $10,000. Important note: the invoice date must always be set after the sync start date. So, what do I mean by that? If we go into Settings, Integrations, Accounting, we can see Sync Bills and Payments starting from 8/1/2025. That's our sync start date. When we're ready to sync, we head into the Sync Center and force an auto sync. Let's go ahead and do that. After the sync runs, you'll see the $10,000 bill appear in the Bills section. Opening this in QuickBooks Online, the bill shows as an inventory asset expense. Looking at the transaction journal, accounts payable is credited for $10,000. Inventory asset is debited for $10,000. This keeps the balance sheet aligned. That was the first example. Now let's look at a bill tied to a catalog item. Here, we've got a classic dad cap. This is linked to a catalog item, denoted by the box icon on the left. When synced, it goes into QuickBooks as a non-inventory product charge service. Settle doesn't sync inventory quantities, but this lets you track expenses by product in QuickBooks reports. Again, the invoice date must be set after the sync start date. Once that's confirmed, we run the sync in the Sync Center. Now in the Bills section, we can see our synced bill for the classic dad cap. Opening it in QuickBooks, the product or service field shows Classic Dad Cap, and the total is $15,000. In the transaction journal, accounts payable is credited $15,000. Inventory asset is debited $15,000. The benefit is in reporting. In QuickBooks, under Reports, Purchases by Product Service Detail, you'll now see that $15,000 tied directly to Classic Dad Cap. Meanwhile, the earlier $10,000 example shows as a general inventory asset, not linked to a product. And again, Settle does not sync inventory quantities, So the classic DAD cap is created in QuickBooks as a non-inventory item. If we check under Products and Services, you'll see Classic DAD cap listed as non-inventory. We can also sync purchase orders. If we look at our purchase orders in Settle, after syncing, they also appear in QuickBooks Online under the Purchase Orders section. Next, let's look at how sales orders sync to invoices. On the sales order page, you can see that we've created a sales order for 5 units of the classic DAD cap at $25 each. On the right-hand side, all customer and fulfillment information is available. At the bottom right, you'll notice an invoice section. Typically, this would show an option to create an invoice, but in this case, one has already been created. Opening the invoice shows that it is directly linked to the sales order, as indicated in the top right corner, along with a link back to the sales order. Once the invoice is created and sent, it automatically syncs over to QuickBooks. It's important to note that this is a one-time sync. If adjustments are made to the invoice after it's sent, those changes will not update in QuickBooks. This is not a two-way sync, so you'll want to make sure everything looks correct before finalizing the invoice. Now, let's move over to QuickBooks. In the Recent Transactions section, you'll see the synced invoice for $125 for Alan Moore. Opening it confirms the amount matches the sales order. This provides a smooth handoff from Settle to QuickBooks, ensuring consistency between both platforms. A common question that comes up is whether there's a payment gateway built into this workflow. The answer is no. Customers can pay via ACH or wire using the routing information displayed on the invoice. If your client's customers are used to a Click to Pay option, that can be enabled within QuickBooks once the invoice has synced. To do this, open the invoice, toggle on the accepted payment methods, and click Save. This will add a payment link to the invoice, which can then be resent to the customer. In this demo, we're working from a sandbox account, so payments can't be fully processed here. However, this is the workflow customers will use in a live environment. By following these steps, invoices flow seamlessly from Settle to QuickBooks, saving time and ensuring accuracy across systems. Now let's talk about external payments. Let's begin with an overview of the scenario we'll be working with. We have a bill for $20,000, which is tied to an invoice for 1,000 units of the classic DAD cap at $20 each. The bill has already been itemized and synced to the inventory asset account. A payment of $10,000 has been scheduled, and a partial payment of $2,500 has already been made. Now we'll see how external payments are recorded and how they sync. To record the payment in Settle, we use the option to add an external payment record. When adding this record, you'll see a toggle to sync the payment to QuickBooks. Whether you turn this on depends on whether the payment already exists in QuickBooks. In this example, the $2,500 payment was made with a credit card and has not yet been recorded in QuickBooks. So we toggle on the sync option, and Settle sends the payment information to QuickBooks against the bill. Settle also keeps track of the remaining balance due and shows a running total of payments applied. Next, let's look at the bill in QuickBooks. Opening the bill, we can see the $20,000 total synced from Settle into the inventory asset account. The balance due now shows as $16,500. That's because the $2,500 payment we synced from Settle came over as a bill payment. In the transaction journal, QuickBooks shows a credit to cash and a reduction to accounts payable for that amount. This confirms that the payment was successfully recorded and reduced the outstanding balance. Now let's see what happens when the process is reversed. This time, imagine we've made a separate payment directly in QuickBooks that hasn't been recorded in Settle yet. For this example, we'll record a $1,000 payment in QuickBooks. Looking at the bill, QuickBooks now shows payments totaling $3,500. That includes the $2,500 payment from Settle and the $1,000 payment we just entered in QuickBooks. But notice that Settle still shows a balance due of $17,500, while QuickBooks shows $16,500. This mismatch occurs because the $1,000 payment exists only in QuickBooks at this point. To reconcile the two systems, we go back into Settle and add another external payment record. This time, since the $1,000 payment is already in QuickBooks, we do not want to sync it again. Instead, we leave the toggle off and record it only in Settle. This ensures that both systems reflect the same outstanding balance without duplicating the payment in QuickBooks. After saving, we now see two external payments listed in Settle: the $2,500 synced to QuickBooks and the $1,000 excluded from sync. Together, they bring the bill in line with QuickBooks. With this process, your bills, payments, and balances remain consistent between Settle and QuickBooks, no matter where the payments originate. When you record an external payment in Settle that hasn't yet been recorded in QuickBooks, use the sync option to push it through. When the payment already exists in QuickBooks, record it in Settle, but leave sync off. This flexibility keeps your accounts clean and avoids duplication. Finally, let's walk through deposits against a purchase order. We'll begin by creating a purchase order for lunchboxes. We're ordering 500 units at $5 each, for a total of $2,500. Sometimes, you may need to place a deposit even without a full invoice so that the vendor can start production or allocate stock for your order. In Settle, click Proceed to Payment to make the deposit. You'll see options to allocate a percentage for the deposit. For this example, we'll place a 20% deposit, which amounts to $500. Next, select your payment method. We're using a paper check in this demo. Then, assign the payment to an account. Here, we've created a sub-account under Inventory Asset called Deposits. This account allows us to track deposits separately from the main inventory account. Since this is a demonstration, the payment won't actually process. We'll replicate it using an external payment to show how it would appear in your records. Once processed, the deposit will appear in your transaction journal. You'll see a debit to inventory asset deposits for $500 and a credit to cash for $500. This entry ensures your accounting reflects that you've paid the deposit but haven't yet received the full inventory. A few days later, we receive the commercial invoice for the order. Open Bills in Settle and select the vendor invoice. The line item shows the full $2,500 for the lunchboxes. Since we already paid a $500 deposit, we reverse that amount here. This adjustment ensures the $2,500 hits the inventory asset account, while the deposit account is reduced by $500. Link the deposit payment to this invoice. After this step, the remaining balance due to the vendor is $2,000. This keeps your records accurate, showing the vendor what's already been paid and what's still owed. Now, sync the invoice and payment information to QuickBooks. You'll see the $2,500 allocated to inventory asset, the $500 deposit reversed, and the $2,000 balance due in accounts payable. Open the transaction journal in QuickBooks to review the back-end entries. You'll find that the bill shows $2,000 owed to the vendor, the initial $500 deposit has already been applied, and the inventory asset account reflects the full $2,500 purchase. The deposit account shows a reversal entry, clearing the original $500 debit. This step ensures that both Settle and QuickBooks match perfectly. And that's a full walkthrough of syncing bills, invoices, external payments, and deposits between Settle and QuickBooks. By following these steps, you'll ensure your accounting stays consistent across systems, your reports remain accurate, and you save time reconciling transactions. Thanks for watching, and we hope this helps you make the most of Settle's QuickBooks integration.